Welcome to the deep dive. If you're currently in the thick of preparing for the ACCA Strategic Business Reporting Exam SBR, then you probably know the feeling.
Oh, absolutely.
It's that unique blend of panic and frustration. You feel like you've mastered hundreds of pages of IFRS standards, you know the rules inside and out, but there's this nagging doubt, this feeling that just knowing the material isn't going to be enough.
And that intuition, that doubt you have, it's not just valid, it is absolutely essential to recognize.
Really?
Yes.
Yeah.
The SBR paper is, well, it's a different beast. It's unlike any other professional level exam because it rewards judgment, application, and communication above everything else.
The old methods don't work.
The old methods are a trap. Trying to approach SBR with a purely technical, memorization-based strategy, the kind that might have got you through earlier papers, is probably the single biggest mistake we see students make year after year.
And that's exactly why we're here today. We have gone deep, and I mean really deep, into 5 solid years of ACCA Examiner reports.
And the technical articles, too.
Yes, and the articles, spanning from 2019 right up to the most recent commentary in early 2024. This isn't just theory. This is a strategic analysis of what the markers actually saw, what frustrated them, and, what immediately made them think, okay, this student gets it.
Our mission here is to give you a strategic blueprint. We're distilling half a decade of examiner feedback into actionable, high-impact advice. We want you to stop thinking like a student trying to quote IFRS rules from a textbook.
And start thinking like.
Start thinking like a professional reporting expert who is sitting in a room advising a board or an audit committee or maybe a CFO.
Okay, let's unpack this blueprint. This deep dive is customized entirely for you, the ACCA student prepping for SBR. We're going to be focusing heavily on strategy, on professional tone, and on real-world application.
We're basically skipping the basic theory. The exam assumes you know that.
Right. We're jumping straight into the psychological and structural flaws that cause most students to fail, even when they have all the technical knowledge they need.
We're starting with what is, I think, the most fundamental cognitive shift required. Moving away from that academic right or wrong mindset and really embracing the judgmental role of a reporting professional.
So part 1, the SBR mindset application versus theory.
Exactly.
When you look across all those examiner reports, what is the single, overarching, non-technical failure? The one thing that just unites the attempts that score below 50?
It's what I call the mindset mismatch. It's fascinating, really. Candidates almost always understand the standards. They can usually, list the 5 steps of IFRS 15, for example, but they fundamentally misuse that knowledge.
Misuse it how?
They apply it in the wrong context. They approach the answer like they're just filling in gaps on a study sheet, not like they're solving a real-world messy dilemma for an actual company.
It sounds like such a simple instruction, apply the rules to the scenario, but clearly it's the main hurdle.
It is, because students are conditioned by years of earlier exams to just prove they know the rules. But SBR is different. It assumes you know them. It tests how you use them. So we've identified 5 big behavioral mistakes that, when they're compounded, almost guarantee a suboptimal result, no matter how much technical knowledge you've crammed in.
Let's get into them. The 5 big mistakes that destroy attempts.
Mistake number 1, and you've kind of already alluded to it, is what we call the theory dump trap.
The theory dump, I can picture it already.
You can. And the examiner comments on this every single sitting. It never fails. Candidates describe the IFRS requirements, they give the definition of a capital lease, or they'll detail the recognition criteria for deferred tax.
What?
But they fail completely to link those requirements to the specific facts, the names, or the figures that are right there in the question scenario.
I can just imagine how frustrating that must be for the marker. They're looking for advice on Company X's specific acquisition, and what they get is 3 paragraphs defining IFRS 3.
Precisely. The goal is professional advice, not academic regurgitation. So the strategic pivot here is, well, it's non-negotiable. Every single technical point you make must be tethered to the scenario facts.
Give me an example. What does that mean in practice?
It means you have to use the names of the companies, Alpha Core's intended disposal, the specific monetary amounts, the $15 million investment, or the events in the timeline, given the change in control that was agreed in January.
So let's say I'm writing about IFRS 5, held for sale. Instead of just writing out the rule, assets held for sale must be measured at the lower of carrying amount and fair value less cost to sell. What should I be writing?
Okay, great example. The application should look something like this. As Alpha Core intends to sell its investment in their Turkish subsidiary within the next 12 months, This meets the definition of held for sale under IFRS 5.
So you've named the company, the asset, the timeline, and the standard.
Exactly. And then you continue. Consequently, the carrying value of $4.5 million must be compared to the estimated selling price of $4.2 million, less disposal costs.
Wow. Okay. That one sentence covers everything.
It covers application, the facts, the measurement, and the standard. It takes the marker straight to the heart of the issue, and it shows you're not just reciting, you're applying.
Okay. That makes sense. So what's mistake number 2?
Mistake number 2 directly attacks the core skill SBR is designed to test. Superficial professional judgment.
Superficial judgment. What does that mean?
The reports show that candidates often recognize that judgment is needed. They know there's a choice, maybe between expensing and capitalizing something, or between 2 different classification treatments.
Right. They see the gray area.
They see it, but then they just state that judgment is required, and then they just move on. They skip the actual justification.
Oh, so they identify the need for judgment, but don't actually show any.
It's a fatal conceptual error. Identifying the ambiguity isn't judgment, that's just step 1. Judgment is the reasoned articulation of why one path is superior to the other.
So how do you fix that? How do you show real judgment?
The strategic fix is to always use the conceptual framework to justify every single recommendation you make. Don't just say, the company should expense the development cost.
You have to say why.
Yes, you say. Given the high level of technical uncertainty surrounding the new product line, expensing the development costs immediately, rather than capitalizing them under IAS 38, is the treatment that best adheres to the principle of prudence and faithful representation.
That's a huge difference. You're leveraging the framework as your, your legal and intellectual justification.
That's a perfect way to put it. It shows you understand not just the rule, but the spirit of the rule, the philosophy behind it.
Okay, so we have the theory dump and superficial judgment. Mistake number 3.
Mistake number 3 is structural, and it's about audience, we call it. Writing like an exam student, not a professional.
So this is about tone and format.
Completely.
Yeah.
If your answer looks like one long, continuous narrative essay, and it ignores who you're supposed to be writing to, be it the CFO, the board, or an investor, you are just throwing away the professional skills marks.
The easy marks.
The easiest marks on the paper. Poor answers show zero awareness of the audience. They use informal language, these huge, long paragraphs, and they totally omit crucial context like the memo or the report format that the question specifically asks for.
So what's the fix here?
The fix is all about tone. You have to adopt a formal, executive-style report or memo structure, use clear, concise headings that a busy CFO can skim, and, critically, avoid phrases like, I think, or the standard says.
What should you use instead?
Definitive, justified language.
That's right.
It is recommended that. Or the required accounting treatment is, you're the expert, sound like one.
Okay, that makes sense. Let's move to mistake number 4.
This one is a clear marker of someone who studied in silos. Weak integration across standards.
Ah, not connecting the dots.
Exactly. SBR scenarios are designed to weave together multiple standards. The biggest trap we see here is with group accounting issues.
How so?
A student might see a scenario about an acquisition. They will correctly cite IFRS 3 business combinations and talk about calculating goodwill, but then they just stop.
When they should be thinking about.
They should immediately connect that goodwill figure to the subsequent mandatory requirement to test for impairment under IAS 36.
So it's a chain reaction.
It's a chain reaction. Another one is deferred tax, IAS 12. It applies to almost every asset revaluation under IAS 16 or a defined benefit scheme under IAS 19. These standards don't live in isolation.
So the strategy isn't just learning IFRS 3, it's learning the IFRS 3 to IAS 36 pipeline.
Yes, you have to train your brain to see those connections. If the scenario involves a foreign subsidiary, your mind should immediately link IAS 21 for foreign currency to IFRS 10 for consolidation. This integrated thinking is what distinguishes a competent student from a professional advisor.
Okay, and the 5th and final mistake.
This one ties back to structure and focus. Poor time management and lack of focus. And this is less about writing walls of text and more about focusing on the wrong thing.
Wasting time.
Precisely. Candidates spend far too much time defining simple standards or performing basic calculations, and then they completely run out of time for the complex judgment required in question 1, which is the heaviest hitter.
So what's the tactical solution?
Rigorous time allocation, which we'll cover in detail later, but also prioritizing judgment over calculation. SBR is about analysis, not arithmetic. If you see a 5-mark segment, that requires a precise, structured answer focused on application and judgment. not half a page defining what IFRS is.
Structure equals efficiency.
Structure equals efficiency, which buys you more time for judgment. It's that simple.
Wow, that paints a very clear picture of the pitfalls. And it's really all about behavior, not a lack of knowledge.
100%.
So let's flip that. What did the examiner report specifically highlight as the behaviors that secured a clear pass or even a distinction? Let's talk about the high score habits.
Okay, let's mirror these mistakes into proactive strategies. High score behavior number 1, demonstrating real professional judgment. This is the opposite of superficial judgment.
So what does real judgment look like?
It means moving beyond just stating the rule and instead evaluating which accounting treatment provides the most useful, relevant information to the users of the financial statements.
Can you give us a concrete example of that logic in action?
Certainly. Instead of just saying a contract is a lease under IFRS 16, a top candidate might evaluate the specific terms. They would note that while the contract might appear to meet the definition of a service,
There's a catch.
there's a catch. The fact that the client dictates when and how the underlying asset is used suggests that control has actually been transferred,
The substance of the transaction.
the substance over the form. So they conclude, therefore, applying the substance over form principle inherent in the conceptual framework, classification as a lease is required, ensuring faithful representation of the economic reality. They evaluated the ambiguity and justified their conclusion using the conceptual spine of IFRS.
That's a world away from just stating the rule. Okay, high score habit number 2.
This is the relentless pursuit of scenario-driven application. We've discussed this as a mistake, but as a positive habit, it's simple. 0 generic descriptions allowed.
This has to be the hallmark of professional writing.
It is. Every single sentence must be tied to the facts in the scenario. The reports consistently praise answers that use specific details. For example, since High-Tech Limited has not yet transferred control of the customized software to the client, Revenue Stream B cannot be recognized under IFRS 15 until the acceptance testing phase is completed next quarter.
I see. You've got the company name, the specific asset, the event, the timing, and the standard.
It leaves absolutely no doubt that you've read, understood, and applied your knowledge to the scenario in front of you.
High score number 3 is tailoring the tone and format. This is all about securing those professional marks early, right?
Absolutely. The top candidates didn't just answer the question. They delivered the answer in the requested format. A memo, a report extract, a briefing note.
They use the headers.
Pristine professional headers too, from, date, subject. They kept their paragraphs short, punchy, and appropriate for an executive audience who, frankly, doesn't have time for dense technical definitions. They used headings like impact on gearing or recommended treatment, which makes the marker's job effortless. And a happy marker is a generous marker.
That's a great point. Number 4, clarity and structure. This seems self-evident, but it's often ignored.
Yes. Just use clear headings for logical sequencing. A model answering question 2 might use headings like relevant standard, IFRS 15, then analysis of contract terms, then conclusion on performance obligations, and finally, recommendation.
It forces you to be logical.
It forces you to structure your own argument logically, ensuring you hit all the required marking points. It's a self-auditing mechanism.
And finally, high score number 5, which you said demonstrates true sophistication.
This is balanced views with justification. This is crucial in those really ambiguous scenarios.
So this is about acknowledging the gray area.
It elevates the answer beyond mere compliance. The best candidates acknowledge that in complex reporting, there might be 2 plausible accounting treatments. They will briefly mention the alternative.
But then they commit to one.
And they explicitly explain why their chosen approach aligns better with the conceptual framework or the economic substance of the transaction.
So instead of ignoring the difficulty, they actually use it to show off their judgment skills.
Precisely. They might write something like, while recognizing the research component immediately as an expense would align with IAS 38's strict criteria, deferring recognition until further technical feasibility is confirmed aligns more closely with the conceptual framework's principle of conservatism and neutrality, mitigating the risk of material overstatement.
That's mastery. You're showing, the technical rules, but also the strategic philosophy behind them.
Exactly. And that transition from student behavior to professional behavior is the true unlock for the SBR exam.
Okay, let's take that mindset now and apply it directly to the structure of the exam paper itself. Part 2. Strategic breakdown of the SBR paper.
The SBR paper is predictable in its structure, but each of the 4 required questions has very distinct demands, time pressures, and opportunities for professional marks. You can't approach them all the same way.
So let's start with the big one. Question 1, ethics plus accounting treatment. It's mandatory, often worth around 30 to 35 marks, and it's where you say the most mental energy is required.
It is.
Hmm,
And the examiner repeatedly notes that failure here often comes from treating the ethical dilemma as some separate, quick-fix question tacked on the end.
but it's not.
It's not. The ethical conflict is always deeply embedded with a technical dilemma. You might be dealing with, say, a management team pressuring the finance department to structure a new equipment agreement as a service contract to avoid capitalizing a lease under IFRS 16,
Why would they do that?
to manipulate gearing metrics, to keep debt off the balance sheet, a very common pressure point.
So, how do we structure the response to tackle both the ethical and the technical parts in a seamless, high-scoring way?
The SmartPass strategy starts with structure. You have to use the TAS format immediately. Threat, arise, safeguard.
Okay, break that down. Let's use the CFO pressure example.
Okay, first, threat. You identify the specific IFAC threat. In this case, it's probably a self-interest threat if the CFO's bonus is tied to debt covenants and maybe an intimidation threat because of the explicit pressure.
Right, and then rise.
Second, arise. You explain how this arises specifically from the scenario. For instance, the pressure from the CFO, Mr. Smith, creates a self-interest threat as his compensation relies on maintaining a low reported gearing ratio. You use the facts.
And finally, safeguard.
Third, safeguard. You suggest concrete actions based on the IFAC Code of Ethics, referencing principles like integrity and objectivity. This has to be a real action, like seeking an independent review, consulting the audit committee, or even, in extreme cases, being prepared to resign if the safeguard fails.
That covers the ethics. Then you have to make the technical transition.
And this is the crucial link. The transition must anchor your IFRS evaluation in the conceptual framework using the ethical context you've just established.
So you connect them directly.
You have to. If the CFO wants to treat the lease as a service, your IFRS analysis must detail why that classification violates the principles of faithful representation and substance over form, making the choice professionally unsound, regardless of management pressure.
So the technical decision has to be the ethically correct one.
And you must state that clearly. This integration is what secures both the technical and the professional marks. It's one argument, not two.
Okay, let's move to question 2. The technical application question, worth around 25 to 30 marks. This is the core application question, right?
It is. This is typically where you find the dense, complex standards. It's where candidates often fall back into that trap of over-describing theory.
What are the high probability areas here?
It's almost always group accounting. So IFRS 3, 10, IAS 28, or the complex modern standards like IFRS 15 for revenue and IFRS 16 for leases. The key strategy here is ruthless efficiency and structure.
So if you're facing a group question, say, on an associate under IAS 28, what's the expected application structure?
You need a structured approach for each component. First, you state the standard, IAS 28. Second, you confirm that the criteria for significant influence, usually that 20 to 50% ownership, are met using the facts from the scenario. Third, you detail the equity method treatment, the share of profit, any adjustments.
And then there's a fourth step.
Then you move to the essential layer, the one that scores the professional marks, stakeholder impact.
Right, the stakeholder impact. Why does the examiner insist on this in what seems like a purely technical question?
Because SBR isn't training calculation clerks, it's training advisors. Your advice has to consider the user of the information.
So give me an example.
Okay, if you are discussing the consolidation of a newly acquired subsidiary, you must mention something like, under IFRS 3 and 10, full consolidation will increase the group's total reported assets and liabilities significantly. This could potentially impact key financial metrics like return on capital employed and the debt-to-equity ratio, which are vital for lenders and investors.
Ah, so you're showing you understand the implications of the standard, not just the mechanics.
Exactly. That commentary is what gets you the professional marks.
Okay, on to question 3. The communication-based question, usually a report, memo, or board paper.
Yes, and the examiner reports consistently show that this is the easiest place to secure professional marks, provided you respect the format. Candidates who use the right structure and tone score highly here, even if their technical detail isn't absolutely perfect.
So the goal is to explain complex treatments like deferred tax on a revaluation to an audience that probably understands business but not the nitty-gritty of IAS 12.
Precisely. The SmartPass strategy revolves entirely around presentation. First, use the formal memo or report format. 2, from, subject, date, It's free marks. Second, use headings that are user-friendly and avoid jargon. So instead of a heading like analysis of temporary differences, you'd use something like impact of asset revaluation on our future tax position.
And how do you tailor the language itself?
You keep it concise. You use clear, everyday language where possible. You are synthesizing, not lecturing. If you're explaining a complex IFRS 9 classification to an investor, you might say, we have classified this instrument at fair value through other comprehensive income. This means short-term volatility will bypass the income statement, offering a less volatile view of our core operating earnings, which should reassure the market about our earnings stability.
It's business-focused language, not textbook-focused.
That's the key distinction.
Okay, finally, question 4, the optional one. This is where we get into current issues, narrative reporting, or conceptual deep dives.
Yes, this is the territory of the well-read candidate, the one who looks beyond the core syllabus.
And it's often avoided, isn't it?
It is, which is a shame because it can be a high-reward section if you approach it correctly. Candidates who only study the old established standards tend to struggle here. The SmartPass strategy demands that you treat the ACCA technical articles as gospel. They are your study guide for this question.
So let's assume the question involves a new area, like accounting for carbon credits, or maybe a deep dive into the definition of prudence following the 2018 Conceptual Framework Update. How should you structure that response?
You must use what I call the balanced evaluation structure. First, you define the new issue or concept. Then, you use the conceptual framework to structure your analysis.
How does that work in practice?
If you're discussing a new exposure draft, for example, you must 1. Identify the relevant principle at play, maybe relevance versus faithful representation. 2. You present the arguments for the proposed treatment, the pros, like better relevance for investors. 3. You present the arguments against it, the cons, like increased measurement uncertainty, which reduces faithful representation.
And then you conclude.
And then 4. You conclude with a justified recommendation, stating which framework principle you believe should take precedence in this specific scenario, and crucially, why.
That structure ensures you're analyzing, not just summarizing what you've read.
And the bonus insight here is mentioning real-world context. Talk about the formation of the ISSB for sustainability or specific examples of climate risk. It shows true mastery and gives you a critical advantage over other candidates. It shows you're actively engaging with the evolution of the profession, which is exactly what a senior reporting professional does.
Okay, this brings us to efficiency, part 3, the SMART focus map. Given the massive syllabus, students need to focus their limited study time on areas that carry the highest risk or appear with the highest frequency. We've analyzed 10 recent sittings. What should be at the very top of that priority list?
It's not about covering everything equally. That's impossible. It's about mastering what we call the hot zones, the standards that require the most judgment and integration.
So let's get into these high-frequency, high-risk areas. What's number 1?
Well, it's no surprise. Ethics. It is mandatory in question 1. Appearing 10 out of 10 times. You simply cannot pass question 1 without mastering the application of the IFAC code and that TAS structure we talked about.
And if your ethics discussion is weak,
the marker will assume your professional judgment is weak across the entire paper. It sets a bad tone.
Okay, what's next? The massive application standards, right?
Right. IFRS 15 revenue, which appeared 7 out of 10 times. This is a trap because the 5 steps seem deceptively simple until they're mixed with complex scenarios involving warranties, non-cash considerations, or agent versus principal judgments. You have to practice applying the judgment criteria, not just listing the steps.
And the other big one, IFRS 16 leases. 6 out of 10 sittings.
And it's tricky because it's all about classification judgment. The trap is often the fine line between a lease and a service contract. Candidates need to focus on the definition of control. Does the customer have the right to direct the use of the asset? Can they control its output? That's where the judgment is, not in the calculation of the right of use asset.
Okay, moving into the integrated topics. You mentioned goodwill impairment, IFRS 3, and IAS 36.
Yes, 5 out of 10 for frequency. This requires deep mastery of the business combination definition, identifying the assets and liabilities you've acquired, and then crucially the subsequent annual impairment testing that's required for goodwill.
And what's the common mistake here?
Examiners frequently note that candidates fail to correctly identify the cash generating unit, the CGU, for testing. Or they forget to allocate the impairment losses correctly, first to goodwill, then to the other non-current assets. The connection has to be instantaneous in your head. IFRS 3 leads to IAS 36.
Okay, now for the technical monster. Financial instruments, IFRS 9.
Also appearing 5 out of 10 times. The greatest pitfall here is misclassification. specifically the SPPI test.
The SPPI test, solely payments of principal and interest.
Yes. This is the test that determines whether a financial asset can be measured at amortized cost or if it must be measured at fair value.
Let's flesh out that SPPI pitfall. What is the specific mistake that students are making?
The examiner notes that students fail to analyze the contractual cash flow characteristics thoroughly. They see the words principal and interest in the contract, and they just stop there.
But it's more complicated.
Much more. The SPPI test fails if the instrument includes things like contingent payments or embedded derivatives or covenants that expose the holder to risks unrelated to standard credit risk, like non-recourse finance features. If the cash flows aren't just a basic lending arrangement, the SPPI test is immediately failed, and that forces fair value measurement.
So you have to analyze the substance of the loan term.
The substance, not just the labels.
Okay. And what anchors all of these judgments across all the questions?
The conceptual framework. It was tested explicitly in 6 out of 10 sittings, but it's vital in 10 out of 10. You must be able to use concepts like relevance, faithful representation, prudence, and substance over form to justify every single decision you make in Q1, Q2, and Q4.
If you don't use it.
If you don't anchor your judgment in the framework, you are just stating an opinion. You're not providing professional advice.
And finally, the forward-looking area, sustainability, ESG, and exposure drafts.
Tested 5 out of 10 times and definitely increasing in complexity. This is question 4 gold. Strategic candidates have to understand the global shift towards mandatory sustainability disclosure, like the ISSB standards, and how these concepts relate back to financial materiality.
So you need to be able to explain why it matters?
Yes. You need to be able to articulate why climate risk or human capital disclosure is relevant to an investor's economic decision-making process. Candidates who can debate the pros and cons of integrating ESG data into financial statements gain a massive edge here.
We've established that the technical articles are essentially mandatory reading. They're often direct blueprints for question 4, and they provide the language for the professional marks in Q1 and Q2. So how do we strategically integrate the most critical articles?
You need to use them as strategic weapons. Take the article on professional judgment. It teaches you how to use the conceptual framework to weigh 2 different treatments. So for Q1 and Q2, whenever you encounter ambiguity, your strategy should be to deploy prudence and neutrality.
Instead of just picking one.
Right. Instead of saying, I choose option A, you state, in order to maintain neutrality and faithful representation, the more prudent measurement of X dollars is selected, as the probability of recovery is less than 50%. That is high-score application right there.
Okay. The Ethics and Professional Skills article, which was updated in 2023, that's key for question 1.
This gives you the specific IFAC terminology you need. When you discuss a self-interest threat, you must also be ready with a specific safeguard that is proportionate to that threat, and you can source it directly from the article. For example, seeking advice from the ACCA technical helpline or using an independent valuation specialist.
So vague suggestions don't work.
Vague suggestions like be more careful will score you a 0.
The sustainability reporting articles, obviously crucial for question 4.
Absolutely. If you get a question on climate risk, you must link it back to the investor perspective, just as the technical articles detail. Discuss how physical risks, like asset damage from floods, and transition risks, like new government policies, impact a company's expected future cash flows.
Which makes it relevant.
It makes the risk information directly relevant to an investor's valuation decisions. You're connecting non-financial data to financial reporting relevance.
What about the current issues articles? They cover things like crypto, which is constantly evolving.
Yes. When you're discussing new assets like crypto, the articles guide you to focus on the challenges, the measurement uncertainty, the recognition criteria. You can argue that due to market volatility and the lack of a definitive standard, faithful representation is compromised.
So what would you do?
You could suggest that some companies are adopting an inventory model under IAS 2 until more definitive guidance is provided. That shows real critical thinking.
And finally, the Communicating Effectively in SBR article. That's the guide for question 3.
This is your guide to professional marks. It emphasizes that a report to the board should summarize the issue in the first paragraph, offer a clear recommendation in bold, and include an impact analysis. But a letter to a non-technical shareholder must use far less technical jargon and focus more on the impact on the share price or dividends.
You have to adapt your language.
You adapt your language based on who you're advising, every time.
This brings us to a really crucial part of the puzzle, part 4, the language of the advisor. We've established that 20% of the paper is for professional skills marks.
A full 1/5 of your total score.
And it depends purely on how you write, structure, and communicate.
So we need to eliminate the language of the student and adopt the decisive, justified language of a professional advisor.
Let's start with the application of IFRS in questions 1 and 2. We need a clear 3-part template for this.
Absolutely. The template is simple. Name the standard, apply to the scenario facts, conclude clearly and decisively.
Give me an example of that in practice.
Okay. IFRS 10 requires the consolidation of subsidiaries. As Company B holds 70% of the voting rights in Company C and controls the operating policies, Company C must be fully consolidated into the group financial statements.
That's confident, concise, and complete.
And notice what's missing. No phrases like, the company should probably, or I feel that. Be definitive.
For professional judgment statements, the language needs to convey justification, especially when you're bringing in a concept like prudence.
The justification must be explicit. You have to use definitive language that links your choice directly to the framework.
So give us a template for that.
Okay, here are two. Template 1 for prudence. Given the high level of estimation uncertainty regarding the useful life of the asset, the more prudent approach, aligning with the principle of conservatism, is to use a shorter useful life of 8 years.
And a second one.
Template 2 for faithful representation. Although immediate recognition of the gain would improve the current year's profit, deferring the gain ensures the transaction is reflected according to its economic substance, thereby promoting faithful representation.
And for ethical evaluation in question 1, you have to use the specific IFAC vocabulary.
Constantly. Use the 5 threats and the 5 fundamental principles. For example, the existence of this related party transaction creates a self-interest threat to the fundamental principle of objectivity. To mitigate this, management must ensure the terms are reviewed and approved by the audit committee.
And you name a specific safeguard.
A specific practical safeguard. This shows mastery of the code.
This brings us to the stakeholder view, which you said is where professional marks are so often missed.
It's the area most students neglect. They do the technical calculation for the adjustment, but they completely failed to discuss the consequence for the users of the financial statements.
Investor-focused commentary is non-negotiable.
It is. You must think about how your decision impacts key financial metrics and investor perception. Let's provide 5 templates for different metrics, just to make it concrete.
Great idea.
1 for earnings per share, EPS. Capitalizing the development costs instead of expensing them immediately will increase reported profit and consequently improve the EPS, positively influencing investor valuation models.
Okay. 2.
2 for gearing or leverage. The capitalization of the leases under IFRS 16 increases the recognized liabilities by $50 million, which significantly raises the debt-to-equity ratio. This could risk breaching debt covenants and may trigger concern among long-term lenders.
3 for net assets.
The revaluation of the property will lead to an increase in net assets, strengthening the balance sheet structure, which is a positive signal of financial stability for shareholders.
4 liquidity.
Immediate recognition of the provision for future warranties under IAS 37 will decrease current assets and increase current liabilities, adversely affecting the current ratio and the market's perception of our liquidity.
And finally, number 5 on volatility.
Classification of this instrument at fair value through other comprehensive income ensures that short-term volatility from market movements bypasses the income statement, offering a less volatile view of operating profit to the market.
That level of detail is exactly what's missing in typical study advice. You're not just doing the journal entry. You're connecting it to the real-world metric that an investor actually cares about.
That connection is where the highest marks are. And finally, the balanced conclusion. Use the opportunity to confirm that your recommended option aligns better with economic substance and investor trust, even if other alternatives exist. It just shows maturity and judgment.
Okay, we've covered the mindset, the structure, the focus areas, and the language. Now with the final part 5, exam day execution and the final checklist.
All of this knowledge is, frankly, worthless if the exam day execution plan fails. SBR is famous for its time pressure, and unprepared candidates frequently run out of time for that complex question 1 analysis.
We have 180 minutes for the exam. The temptation is to allocate that time evenly, but you stressed that SBR requires mental energy distribution, not just time distribution.
That's right. The questions are not created equal in terms of their mental load. So here's the SmartPass time allocation plan.
Let's get.
For question 1, with its 30 to 35 marks, it requires the highest mental energy. You must approach it with a fresh brain. I'd allocate 55 minutes. This gives you enough time for the TAS structure, the nuanced IFRS evaluation, and justifying it all with the framework.
Okay, 55 for Q1. What about Q2?
Question 2, the pure technical application gets 45 minutes. It's all about structure and efficiency here.
And question 3, the communication one.
Question 3, focused on format, gets 40 minutes. It requires less technical depth than Q2, so you're focusing more on structure and tone.
And that leaves question 4.
Question 4, the conceptual or current issues question, gets 35 minutes. This is where you leverage your reading of those technical articles.
And that leaves 5 minutes for an overall review and buffer time.
It does. And the critical strategic tip is this. You can start with the question that gives you the most confidence, but you should never, ever leave question 1 until the end.
Why not?
If you leave question 1 until the last 30 minutes, you will rush the ethics, your judgment will be superficial, and you will fail to integrate the conceptual framework effectively. Question 1 sets the tone for your professionalism for the entire paper. Start strong.
We need to reinforce those structure templates that make the marker's life easy. Let's just confirm the battle-tested structure for question 1.
Question 1 uses the TAS plus IFRS flow. You start with clear subheadings for the ethical threats. Detail the threat, explain the arise using facts from the scenario, and suggest a specific safeguard. Then you move to the IFRS discussion using the framework principles, faithfulness, prudence as your central justification. And remember, use short, numbered, or bulleted paragraphs.
For question 2, the technical application core.
The 3-section format is paramount. 1, a brief, standard introduction, 1 or 2 lines. 2, detailed scenario application. And 3, your recommended treatment, including the stakeholder impact. Avoid writing continuous blocks of text. Use headings for each separate issue in the scenario.
And for question 3, the professional writing exercise.
Question 3 demands real-world formatting. The second you open that question, set up the memo or report. 2, from subject. Use professional headings for your content like issue overview, accounting analysis, strategic recommendation, and financial impact on users. That structure is the template for scoring professional marks. If you don't use it, you can't score them.
The difference between a near miss and a clear pass often comes down to this final checklist, the things you must mentally confirm before you step into the exam hall.
So let's review the must-know core topics one last time. You must have mastery of the conceptual framework as a justification tool, ethics and the TAS structure, IFRS 15 and 16 for classification judgment, goodwill and impairment, particularly CGU identification, deferred tax, the IFRS 9 SPPI test, and the current exposure, drafts, or sustainability topics.
If any of those are weak,
You have a critical vulnerability.
and what about the must-practice techniques, the behaviors that need to be automatic by exam day?
You need to practice writing ethics answers that immediately suggest a specific safeguard, not just identifying the threat. You must practice judgment answers where you explicitly weigh 2 options and justify your preference using the framework. And you need to practice drafting those memo-style question 3 responses, complete with the 5 stakeholder impact templates we discussed. You have to train your fingers to type professional language under pressure.
And finally, let's just recite the red flag mistakes to avoid the actions that signal amateurism to the marker.
Okay, the big 4. Do not write ethics answers without suggesting safeguards. Do not quote IFRS rules without specific scenario application. Do not ignore the requested memo or report format in question 3. And in question 4, avoid over-describing theory. The examiner is looking for analytical skill, not historical knowledge. Check this list the night before the exam.
This deep dive provides the roadmap, but ultimately the execution is up to you. SBR doesn't just test what you know, it tests who you are as a reporting professional, demanding clarity, strategy, and reasoned judgment.
Focus on those high-scoring habits we talked about. Be calm, be analytical, and write with professional confidence. That strategic approach is your weapon for securing the pass.
If you found this deep dive valuable, we encourage you to subscribe to the SmartPass YouTube channel for more exam strategy breakdowns. And if you want to download the full, comprehensive 5-year SBR Examiner Strategy Report, the blueprint we just discussed, including detailed examples and practice templates, the link is available right in the video description. Good luck with your SBR exam preparation.